You're listening to Seven Horns AI, your AI-powered market update. Hello and welcome to our weekend market review, coming to you on Saturday, June 6, 2026. Let's dive into the past week. Friday saw a sharp sell-off across Wall Street, marking its worst day since October. All three major indexes tumbled after a much stronger than expected May jobs report reignited fears that the Federal Reserve will raise interest rates, dashing hopes for near-term easing. The S&P 500 declined 2.64%, snapping a 9-week winning streak, while the Nasdaq Composite plunged 4.18%, its steepest single-session drop since April 2025, erasing 2 weeks of gains. The Dow Jones Industrials fared relatively better, down 1.35%, giving back a chunk of Thursday's rally when it touched a record high. The catalyst was clear: a blowout jobs number, showing 172,000 new jobs with unemployment steady at 4.3%, sent bond yields spiking, with the 10-year Treasury yield moving above 4.5%. This pressured growth stocks, especially semiconductors. The Philadelphia Semiconductor Index plummeted 10.3%, its worst day since early 2025, wiping out over $1 trillion in market value. Broadcom was at the epicenter, falling 7.92% on Friday after its fiscal second quarter earnings, extending a 2-day drop of over 20%. Tesla and Nvidia were also among the biggest losers, both down over 6%. In contrast, defensive names like Coca-Cola rallied 3.46% and McDonald's gained 2.61% as money rotated away from risk. International markets tracked this sentiment, with the Japan ETF down 3.62% and the China and Hong Kong ETF down 2.03% in their last session. Now, looking at some of the standout moves and market positioning over the weekend, we are seeing some early signs of stabilization. Marvell Technology, which had dropped 16.74% on Friday, has already bounced over 3.5% to $272.88 in weekend extended trading, suggesting some bargain hunting. Other megacaps like Apple are showing a slight positive drift, up 0.14%, while Microsoft is down just over 1%. Crucially, S&P 500, Nasdaq 100, and Dow futures are essentially in line with Friday's cash closes, with no additional panic building over the weekend. Gold and oil are also showing modest bounces after Friday's decline. This suggests the bulk of the damage occurred during Friday's trading session, and the market is now absorbing the move rather than extending the rout. Looking ahead to the week, investors will be closely watching for ongoing Federal Reserve rate hike expectations and the performance of semiconductors and mega-cap artificial intelligence stocks. We also have key earnings reports coming, including Oracle on Wednesday, Adobe on Thursday, and later in the month, FedEx, Micron, and Nike. Labor market and inflation data will remain top macro catalysts. With Friday's sharp sell-off in the U.S. and Asian markets already showing significant downside pressure from their last sessions, we expect a cautious tone heading into Monday's open. The big question is whether bargain hunters will step in after the Nasdaq's 4% plus rout, or if the rate repricing will continue to cascade. That's your market wrap for today. This has been a Seven Horns AI production. For more insights, visit us at sevenhorns.ai. We'll be back tomorrow.